Visionary Investor Podcast. I'm your host, Andrew Marks, and I'm a stock market wealth investment mentor, speaker, and entrepreneur who has a passion for all things stock market investing, diving deep into quantitative and qualitative analysis, creating formulas and calculations that optimize stock market investing, and creating a life that fits your biggest and wildest dreams. You're in the right place if you're ready to tap into some investing strategies that aren't taught without getting a degree, working for an investment firm, and some that aren't even taught anywhere else in the world. Find deeper clarity on your investments and what your future can hold. Strengthen your understanding of recession, stocks, and your money, and learn the tools to accelerate your investments and wealth. You're here to be a visionary investor, not an average one. A passionate disruptor with uncommon goals in the investing world. It doesn't matter where you are in your investing journey. You're never too late to become a successful investor, and I'm here to help you do that. Let's get into the investing flow. You get influenced though, and you're like, because someone's talking about how much this investment could grow over time, so you're influenced by that. But then later on, you're realizing this is not an investment you agree with, and you feel guilty and you feel wrong for investing into something that goes against your beliefs. Yeah, so why is investing important to you? Start by thinking about what your life ambitions are, your visions, and then how investing can help you achieve them. There's so many different types of investments. Before investing into anything, I'd highly suggest that you do this first. Honestly, investing is incredibly personal, and it's more than just to make money. It's more than about your money mindset. However, your mindset around investing is a critical and highly underspoken about topic that definitely needs a lot more clarity. So let's start here with how much do you understand about your goals, your passions, your ethics, and your beliefs. This is a really, really important place to start. So I'll give you a few questions to kind of help guide you. What even is investing? Why do you want to invest? How do you learn how to do it? Do I want to invest to make more money, to grow my wealth, to have my money work for me so I can enjoy other things in life? Or is it really a whole lot deeper than all of this? Why do I want more money? What will having more money bring me? Is it financial security, freedom, independence? Maybe it's the desire to not want to struggle anymore to pay your bills, to be able to provide for yourself, your family, etc., to live the life that you are meant to live, to create experiences that light you up. Maybe you want the ability to travel the world, to eat foods you love, to create memories, to get lost in adventure, to get lost in nature, to have time and money to do the hobbies that you love, or even just to have the time to do anything that you'd like to. Imagine that. Could be materials, could be non-materials, whatever money means to you, that's important. All of these whys are part of your own holistic ecosystem that leads to an increase in your dopamine levels, aka your own quest for happiness. So one can say, yeah, I'm investing to grow my wealth, but define what that truly means to you, because that's really going to mean something different for everyone. Why do you want this money? What will you do with it in the future? Are you going to use it to buy a house? Are you going to use it to pay for your child's education, to start a business, or just to simply feel more financially secure and able to spend the money the way you'd like to? If something makes you feel good, that's something that's clearly important to you. It does not matter what anyone else says about it, but let's be honest, it definitely is not always that easy. So can you take a second to just imagine having an extra $5, $500, $5,000, $5 million, $50 million, or even $5 billion? At which number that I just mentioned did you first get shocked when I said it? Take a minute, write this number down, and even think, why did this shock you? What's your belief system around this amount of money? So I have a question for you again. Where do you set your money goals in life? And that may change throughout your life, which is perfectly okay. When we're children, I rember at some point having an extra $5 sounded great. And speaking of childhood, generally we're taught to go to school, get a job, maybe even get a job you love, but better make sure that it'll pay your bills. I wanted to be an architect when I was growing up, and I was told from a very young age, probably wouldn't make me that much money. If I knew what I knew now, I would have probably become an architect. And who knows, maybe in the future, I'll decide to become one. So why am I telling you this? Others influence us, whether that's friends, family, peers. The world influences us. Social media, this podcast, everything around us influences us. Some influences are great and others are not. But how do you handle these influences? One of the biggest takeaways that I want you to grab from this episode is to learn how to decide what influences you let into your life and what influences you just completely block out. This relates exactly to your own goals, your passions, your ethics, and ultimately your success as a stock market investor. Something that's so common is you'll hear your mindset around money is so important, and that's accurate, but let's take a few steps further into that. Your mindset really around everything is so important, especially when it comes to investing. And that's just where visionary investing in the stock market begins. Being clear on your own mindset and not being influenced by how others look at mindset will completely set you apart. Mindset's not just about money, it's about your own goals, your ethics, your beliefs, your passions, and so much more. So casually, let's break down your goals. You don't need to get too detailed with this just yet. You can absolutely refine this over time. At least have a general overview of it. The basic key factors to ask yourself are the following. How much money do you want to have by what date? Easy way to calculate this is by using a compound interest calculator, and I'll link one in the description below of this podcast, a simple one that you can use. The biggest impact to how you can grow your money over time is your interest rate or expected return, which will be determined by the factors I'm about to speak about, but we'll also get further into this in later episodes. Imagine if you invested $8,000 initially in something and added on $100 per month for 30 years, which you earned a 15% return per year. In 30 years, you would have over $1 million. Now, if we do the math here, you would have only invested $44,000 during this 30-year time period, but because of compound interest, which means your money grows on top of the money you've earned, essentially your interest is growing more money on top of that interest. $44,000 would have eventually grown into $1 million. Now, let's just take a step back and think about that. You may be thinking $44,000 is a lot, or you may be thinking, oh, $44,000, that's nothing. But the point of this is to say that you're just taking a small amount and imagine in the future it becomes $1 million because of compound interest. This can change your life. Compound interest is incredibly powerful. The next factors to consider are how much can you invest today as an initial investment if you wanted to? How much additionally can you invest either each month, each quarter, or even each year? What type of risk can you handle? First, risk tolerance. If you invested $1,000 1 year ago and now you're down 20%, so now you only have $800 in your investment account, which by the way could definitely go back up if you have strong investments, which of course will be your goal. But is being down 20% in 1 year something you can handle? Because if you can't handle that, then your risk tolerance wouldn't even be that amount. This is ultimately based on your own emotions, and it's what you truly can handle. The second is risk capacity. So if you could imagine right now, if you could think how much risk you could actually afford to take. So if you're looking to make a large purchase yourself in 3 months, like buying a house or starting a new business that's very capital intensive, obviously you wouldn't have the risk capacity to take on a very risky investment that may require you maybe, 1 to 2 years to become very profitable. So this isn't something you can afford to do at this point. Currently, your risk capacity would be lower, but in the future, it could be different. Your risk capacity also is what is your ability to bounce back or be okay financially, mentally, and emotionally if you lose money investing. Now, of course, the goal is to never lose money investing, but we absolutely need to address these risks of investing because it's possible to lose money investing. And if one gets too emotional around investing, such as after an investment is down 10% 1 year, getting scared, deciding to sell the investment, technically that person would lose that 10%. But imagine instead if that person stuck to a strategy, did an analysis, realized the investment had a high probability of increasing by 20% or more the following year, which it did proceed to do, and then the investment was up a total of 10% instead of actually being down a total of 10%. The next part of your goal is your time frame. How long do you plan on investing for? Maybe you're looking to invest for the next 40 years and you want to be riskier with your investments. And I'm saying this in quotes because there are always ways to mitigate that risk, but it really depends on your strategy, your mindset, and essentially your other goals. Maybe you're looking to retire within 5 years and you want to make sure that you have the money you need for retirement, so you're very risk averse. These are obviously two different scenarios, and this is going to depend again on your specific goals. That being said, let's break down the ethics, which is not always defined and talked too much about, but in my opinion, this is really a big component of investing. So now I know not everyone's going to care about ethics of investing, but here's why I think you should. It's incredibly, incredibly important to you. So if you invest into something that you realize you don't actually support or believe strongly in, are you really going to want that investment to grow? Because deep down, you'll have a conflict of interest. Maybe there is a specific CEO and you're considering investing into the company, but you don't really agree with this person's methods, how they're handling their employees, how they're treating the company. Maybe they're doing shady things, whatever it is. This is a problem because obviously you don't align if you think that what they're doing is negative or goes against your own ethics, then it's not going to be a good investment for you. There's a whole type of investment called ESG, which stands for environmental, social, and governance. How do companies consider these factors in the decision-making process? Get clear on the types of investments you truly care about to support based on your specific belief system. And now where things really could come into conflict is if you're influenced by someone else. Let's say one of your parents or one of your friends or someone in your family says to you, I love this investment, and you get influenced and you don't realize at the time that it's like not really an investment that you truly feel strongly about because you don't like things that are going on within the company. Or maybe you don't even like the company at all and what they do or even the industry. You get influenced though, and you're like, oh, like, because someone's talking about how much this investment could grow over time. So you're influenced by that. But then later on, maybe it's years later after you're already investing into it, you're realizing this is not an investment you agree with. And you feel guilty and you feel wrong for investing into something that goes against your beliefs. Whether that investment has increased, decreased, stayed the same, the point of it is you want to feel good about the decisions you're making with your investments. So lastly, let's break down your passions. Would you agree with me that it's definitely more enjoyable to invest into things that you're passionate about? And then you'll be more inclined, obviously, to do the necessary due diligence. You'll probably feel a lot more confident about your investment. Who says investing needs to be boring? One tip I'll share with you is this. Don't focus so heavily on getting all this perfect. Instead, focus on setting some goals, understanding what types of investments you would feel good about and what types of investments you definitely don't want to be involved in, because you want to find what's true to yourself so that you can honestly be true to yourself and not make conflict of interest with your investing. Your success as an investor of any kind is going to be correlated to your ability to clearly define your goals, your ethics, and your passions. But again, as I said, loosely doing that first is still very, very helpful. Over time, you will refine this more and more. There are so many different types of investments: investing in yourself, in your business, private equity, venture capital, real estate, bonds, stock market, commodity market, foreign exchange, cryptocurrency, and so much more. In the next episode, I'll start explaining more about stock market investing, which is the area that you'll hear most about on this podcast. So I have a challenge for you. Do the introspective work, which will help you answer the question that I started with this episode. Why is investing important to you? That's going to be different for everyone. Remember, that is very, very specific to you. All right, everyone. Thanks for listening. Don't forget, subscribe to the podcast, leave us a kind review, follow us on all other social media platforms at The Visionary Investor, and have a great day.